Hello everyone. Welcome back. Today, we've got some crucial news you don't want to miss. Let's dive right into the top financial headlines and break down what's happening. There are two main points here worth paying attention to. First, today's Bloomberg headline reports that US consumer confidence has jumped to a 6-month high, largely due to lower interest rates. This morning, the University of Michigan released its October consumer sentiment data, showing a slight increase in the final confidence index going up from 70.1% to 70.9%. At the beginning of October, it was at 68.9%, so this has really sent a positive signal to the markets. The report also includes consumer expectations for inflation. According to the data, Americans expect inflation to be around 2.7% next year, the same as last month's forecast. This stability means consumers aren't more worried about rising prices, but they aren't necessarily more optimistic either. For the next 5 years, expectations are a little lower at 3%, down from last month's 3.1%. This subtle shift shows a bit more consumer optimism toward inflation over the longer term. Interestingly, the report also highlights that consumers are showing more interest in buying durable goods, largely because of the rate cuts and the hope that rates will keep trending downward. It's also worth noting that lower-income consumers' income growth expectations are still trailing behind those of higher-income consumers. This gap is a common global issue, where economic growth tends to benefit the wealthy more than the poor, a problem that remains unresolved and is often debated. Now, the other piece of economic news that's getting attention also comes from Bloomberg. Their headline reports that ECB Council member Bojan Varsel is advising against a rush to cut interest rates or making overly aggressive plans. In an interview from Washington, this Slovenian official emphasized a step-by-step approach based on economic data, which he believes is the best method for policymakers. He said that since the ECB's lending rates are now approaching a neutral level, one that neither spurs nor stifles growth, it's important to keep policy directions clear but cautious. Varsel expressed comfort with the data dependency of current policy and stressed not pre-committing to anything but waiting to see how data plays out. So, what does this mean, and why is Wall Street paying close attention? It ties back to yesterday's news from the German central bank governor, who noted that Europe's economy is either in or near a recession. Meanwhile, inflation in the Eurozone has unexpectedly dropped close to the ECB's 2% target, which brings up a new worry: Europe might face a situation similar to China's recent economic struggles, namely, deflation. Deflation often signals two things: low inflation and weak demand. Growth stalls out. Currently, inflation in the Eurozone is sitting around 2% and is expected to drop further. At the same time, recession signals are emerging. This puts pressure on the ECB to cut rates sooner than planned, as highlighted by both the German and Slovenian ECB officials. This internal push within the ECB for quicker rate cuts is gathering momentum. For anyone following Europe's economy or the euro, this is something to watch closely. Wall Street's interest here indicates they're already factoring in this trend and possibly making early investment bets based on it. Next, let's focus on 3 messages about Russia. To start, let's dive into what Putin recently had to say about North Korea potentially sending troops to help Russia in Ukraine. According to Reuters, when asked directly whether North Korea had deployed soldiers to support Russia, Putin didn't give a clear answer. Instead, he replied that Russia's military relationship with North Korea is our own business. This response came during a press conference after the BRICS summit, where Putin referred to Article 4 of the Strategic Partnership Agreement between Russia and North Korea, saying that Russia had officially approved the agreement. So, what's in this Article 4? Putin explained that it includes a commitment for both sides to provide military and other assistance if either country faces an attack. Putin's remarks seem to suggest a mutual support arrangement, particularly as tensions have escalated recently between North and South Korea. While he didn't confirm any specific North Korean troop presence in Russia, he hinted that if either side's security was threatened, the other would provide support. Next up, the Wall Street Journal reported that North Korean soldiers have indeed been spotted in Russia's Kursk region. According to Ukraine's military intelligence, the first group of North Korean troops trained in Russia has been deployed to this area as of October 23, 2024. The report claims there are about 12,000 North Korean soldiers, including 500 officers and 3 generals, now stationed across 5 Russian military bases. Ukraine's intelligence also stated that Russian Deputy Defense Minister Yuri Kurlikov is overseeing the training of these North Korean forces. This deployment has triggered significant concern among Western nations, with calls from Ukraine for stronger sanctions against North Korea. Interestingly, in the past, major intel like this would have first come from the US, but this time, it's been South Korea and Ukraine leading with these revelations. Meanwhile, the US has been slower to confirm, and when it does, it's often in smaller numbers than those initially reported by South Korea and Ukraine. This discrepancy has led some in the West to question the accuracy of South Korean and Ukrainian reports and to remain cautious about taking these claims at face value. Finally, one story that stirred quite a bit of conversation is a recent Wall Street Journal article revealing that Elon Musk and Vladimir Putin have allegedly been in regular contact. The two reportedly discuss various topics, including geopolitics, business, and personal matters. According to insiders, Putin even asked Musk to refrain from activating Starlink internet services over Taiwan to avoid upsetting China. This alleged dialogue between Musk and Putin has prompted security concerns, with both current and former officials from the US, Europe, and Russia confirming these conversations. Some speculate that Musk's shifts in stance regarding Ukraine could be related to these communications. Initially, Musk was vocally supportive of Ukraine, even providing Starlink terminals to aid their communication efforts. However, around late 2022, Musk's position seemed to shift, as he started openly criticizing Ukraine on X, formerly Twitter, and providing more commentary sympathetic to Russia's perspective. At one point, Musk apparently discussed the Kremlin's red lines with Ian Bremmer, the founder of the Eurasia Group, who then made these claims public. While Musk denied sharing these details with Bremmer, the reported interactions have sparked debate over Musk's political influence and motivations, especially given his business interests in China and his tendency to engage directly with global leaders. Today's Wall Street Journal report is likely to keep fueling this conversation as people try to determine if Musk's actions reflect his own values or simply serve his business interests. Thirdly, here's the latest on the US election. I know everyone's curious about the situation in the swing states, so I shared 3 major stories yesterday. One was from the Wall Street Journal, another from The Economist, and a third from an interview Cuomo did with a well-known American history professor recognized for accurately predicting past elections. This update got a lot of comments, and I noticed some Trump supporters weren't too happy about it. Honestly, I get where they're coming from. On this channel, I focus on political news that ties into finance, which investors need to keep an eye on for potential risks. Now, I understand if you're not into finance and just go by your personal preferences. If you're a fan of Trump or Harris, you do you. But if you're working, investing, and thinking about your livelihood, you've got to consider all kinds of possibilities. I also get why some folks feel anxious. It's similar to stock investors who feel nervous when someone points out potential issues with a company or a stock they're invested in. When you're secure in your investment, you're more likely to look for negative data to anticipate any risks. From this perspective, it doesn't make sense to be overly worried just because the election outcome might not align with your preference. The world keeps spinning regardless. Now, for today's update on the election, here's the latest from Bloomberg: Republicans' early voting surge, what we know from ballots so far. According to Bloomberg's report, we're seeing some surprising numbers this year. In 3 key swing states, Arizona, Nevada, and North Carolina, Republican registered voters are outpacing Democrats in early voting, which is unusual since Republicans typically haven't embraced early voting in the past. This shift just weeks before Election Day could be encouraging for the GOP. The article also discusses Trump's mixed signals on early voting. He's been vocal about 2020 election fraud and critical of early and mail-in voting. But in the last 4 years, Republicans have pushed to close the early voting gap with Democrats. Trump even commented on this in a recent Fox interview, saying he has mixed feelings about early voting but emphasized the importance of voting, mentioning that he plans to vote early himself. Bloomberg also shared insights from the University of Florida's Election Lab, which tracks early voting data. So far, 30 million Americans have cast their ballots, and we're seeing record early turnout in states like Georgia and North Carolina. In these 7 swing states, Trump's GOP is leading early voting in 3: Arizona, Nevada, and North Carolina, while Democrats lead in the other 4. This shift is something we haven't seen in previous elections, where Democrats typically dominated early voting across the board. What impact will this have on the final result? Opinions are mixed, but it's a notable shift worth following closely. At last, here's another update from Bloomberg. The headline reads, TSMC's Arizona chip production yield surpassed Taiwan's in win for US push. The subtitle says Arizona's output is 4% higher, which is significant. Earlier this year, the Phoenix plant started trial production, and now TSMC's first Arizona plant has reached early production levels that actually surpass those of its similar plant in Taiwan. This is a big win for the US expansion project, which faced some initial setbacks from delays and labor conflicts. According to someone involved, TSMC's US division president, Cassidy, shared in a webinar that the Phoenix plant's usable chip yield is about 4% higher than the Taiwan plant's. For the semiconductor industry, yield and quality are crucial. These metrics determine if a plant can sustain the massive costs involved in chip production. This achievement also shows progress in Washington's efforts to revive US semiconductor manufacturing. TSMC, a major chip supplier for companies like Nvidia and Apple, is set to receive $6.6 billion in government grants, $5 billion in loans, and a 25% tax credit to build 3 Arizona chip factories. While TSMC didn't comment directly on Cassidy's statement, TSMC CEO, Mark Liu, recently said that their first US plant started using 4 nanometers technology for test production back in April, with very satisfying results and high yield rates. This is big news for US-Taiwan cooperation and the Biden administration's push for supply chain security. Previously, all we heard about TSMC's US plant was that it was struggling to adapt, with workers hesitant to put in overtime, causing delay after delay. Even Foxconn's project in the US had issues, which cast doubt on TSMC's Arizona project. Because of that, media coverage in the US has been pretty cautious. But now, not only has TSMC officially started production, but the quality is top-notch, which has left many in the US both pleasantly surprised and impressed. That's all for today. Thanks so much for watching. If you found this video helpful, don't forget to hit the like button and subscribe for more updates. I look forward to seeing you in the next one.